Happy Monday, everybody. I hope you had a great weekend. Today is the last day of February, and this is your Monday market update. So it almost seems silly to be talking about the market when one of the biggest land events in Europe since World War II is going on. But you did not tune in to hear me talk about what's going on and with war updates. So much of what's happening in Ukraine will affect this market, but I'll leave it to you to find your favorite news source to hear the constant reports of what's happening. I'll try to give you the outcome at the market level. So there's so much to discuss. I'm going to try to keep it to a recap of last week and the best that we can do of what we can figure out what we can expect for what's this coming week. There's sure to be some major surprises, but I'll try to keep it to what we actually know. So last Monday was the only quiet day in the whole week last week, and that is, of course, because the market was closed for the President's Day holiday. The rest of the week left us yearning for that quiet. Stocks gapped lower at the open on Tuesday. Putin recognized two separatist republics in eastern Ukraine and sent peacekeepers in. The West lined up to condemn the action. UK and Germany started all that. President Biden came in later. We're going to talk more about that later. Stocks bounced off the early lows and even went slightly positive with good economic numbers, easing some of the stagflation fear, so that was good. But news flow from Ukraine was relentless. Stocks rolled over about lunchtime, and when the president spoke, the market turned back up a bit, but again rolled over into the close. The S&P 500 was down 1%, Dow down 1.4%, NASDAQ down 1.2%. Markets on Wednesday fell again as investors watched what was developing. Global markets were higher in the pre-market, reacting to what they believe was a milder initial wave of sanctions, but that disappeared quickly as the reports started to come in about cyber attacks in Ukraine, state of emergency declared there. Ukraine told all their people to leave Russia. Russia pulled out of the Ukrainian embassy, and the stocks, they tried to rally at one point, but the weight of the world literally was just too heavy. So it rolled back over, continued lower into the close. The S&P 500 closed down 1.84% for the day. Thursday, we woke up to the fact that Russia had launched attacks into on the Ukraine. Global stocks dropped over 3% and oil spiked higher. The rhetoric was amazing. World leaders everywhere lining up to react to Putin's comments and his speeches. Stocks overall fell to multi-month lows in the morning in reaction to the news. Then as the day went on, the market started to recover a bit into midday. Then once President Biden spoke, the markets viewed the reaction of the world and the U.S. as not even close to the worst case scenario, and that was what was being priced in. The market reacted to being overdone, right or wrong, and the dip buyers came in. And wow, what a day it ended up being. It seemed there was a major case, probably one of the biggest we've seen in a long time, of buy the rumor or sell the rumor, buy the news. The Dow was down 850 points at one point and ended up 93 points. That's a 997 point round trip from high to low, from low to high. S&P had a 181 point swing, ended up 64 points, a 4% swing from low to high. And in case you were wowed by that, the NASDAQ had a 900 point swing from low to high, ended up 436 points. The 10-year yield was at 185 at one point and closed at 196. This day was one that had even the talking heads had to catch their breaths on this one. Friday was another day in the green. The market acted as if the conflict, we'll use that word for now, was coming to an end with Russia closing in the Ukraine capital. One of the Fed favorite inflation measures, the core PCE price index, was a bit hot, but pretty much in line with expectations and not too far off to change the course of the Fed. Dip buying and chasing took the market surging into the close. The Dow finished up 834 points, or 2.5%. S&P 500 was up 2.25%. NASDAQ was up 1.64%. 10-year yield up at 199 again. Oil sold off the war premium and ended back near $90 a barrel. Quick rundown of what we know that we'll see this week. The rest is up to the Russians and the rest of the world. We're set to get some more earnings, even though most of the biggest companies have already reported. We'll get a lot from the retail space, which we've talked about before how important that is. Today we'll see Chicago PMI along with a few company earnings. We'll also start to hear from the Fed again. Bostic from Atlanta should speak. Tuesday will bring some more earnings, including a few of the retailers, Target and Kohl's, Nordstrom and a few others. Mester from Cleveland, Fed should also speak. Few economic numbers, but the biggest news will come from the President's State of the Union address, his first since taking office. Will he try to steal the spotlight from Russia? We'll see what happens. Wednesday, we'll start the jobs week with the ADP report, add in the beige book from the Fed, and even some oil information. But still, the question remains, will that knock Russia off the front page? I don't know. If that does not, certainly we'll see. Jay Powell is going to try because he's going to give his annual Humphrey Hawkins testimony to both houses of Congress, one on Wednesday, one on Thursday. No surprises should come from anything, but remember, watch out for the Q&A because that always could have some surprises. We're also here from Evans and Bullard from the Fed as well. Thursday will bring some more labor numbers, and this is so important. This remains the focus. Remember, it is one of the two Fed mandates, so they do tend to pay attention to this. Jobless claims will be out as well. Day 2 of Powell, and we'll also hear from Williams as well. Fed jobs report is due out on, the February jobs report is due out on Friday, and although there's little talk about it right now, this week the reports are very, very important because the other big elephant in the room, the Fed. March brings the next Fed meeting and almost certainly the first rate hike. I think this should catch you up on all that's going on right now, or at least a ton of it. There is so much going on. Even as I record this, I do think the information we're talking about, especially earnings, jobs, and the Fed, those are going to be the long-term focus. We're going to keep our focus on the rate hikes, how fast they come, the balance sheet, and how fast they reduce that. The markets are going to continue to focus, continue to react to the Russian news in the short term. Our prayers are for a quick end to this. As the markets digest nonstop news, remember that we need to keep our eyes on our goals. Come back Friday for our planning video, and we'll look to keep our eye on the goal then. Have a great week.